Can you change your Xero fiscal year end date? As of 2026, changing your Xero fiscal year end date isn't a straightforward self-service process. While Xero doesn't offer a direct button to change it yourself due to data integrity concerns, there are support-assisted options, especially for premium and ultimate subscription tiers. We'll explore these options and the factors involved. To change your fiscal year end date in Xero, the primary method is to contact Xero support through their Help Center. You'll need to submit a request form specifying the desired new date and the reason for the change. Be prepared to provide justification and potentially undergo a review by Xero's accounting specialists. First, log into Xero and navigate to the Settings menu, specifically the General Settings tab. Note that the fiscal year end date cannot be changed directly here, as shown in this settings page. Next, access the Help Center's Contact Us form to submit your request. Fill out the request form with your desired new fiscal year end date and provide a clear reason for the change. Your request will be reviewed by Xero's accounting specialists. This process typically takes 5 to 10 business days and may involve fees starting at $199 for premium assistance. For established accounts, data export to a new organization may be required. Xero support is more likely to approve your request if your organization is new and hasn't recorded any transactions. This ensures data integrity and prevents complications with existing financial records. For established accounts with transaction history, approval is less certain. Xero may require additional review to assess the impact on historical data and reporting. In some cases, Xero may suggest exporting your data to a new Xero organization with the desired fiscal year end date. This creates a fresh start while preserving your information. Keep in mind that changes generally won't retroactively alter historical data. The process can take 5 to 10 business days and may incur fees starting at $199. Ensure all bank reconciliations are up to date before requesting changes. Always consult a certified accountant to avoid potential audit issues or errors in tax filings. If a direct change to your fiscal year end isn't possible in Xero, consider exporting your data and importing it into a new organization with the correct fiscal year end date. This alternative solution involves creating a new Xero organization set up with your desired fiscal year end, then migrating all your historical data, including transactions, contacts, and settings. The process can be complex, requiring careful planning to ensure data integrity. You may need assistance from Xero support or third-party integrators to handle the migration smoothly. Be aware of potential costs, which start at $199 Australian dollars for basic support assistance, and the time involved, typically 5 to 10 business days for the complete migration process. Always back up your data before starting and consult with accounting professionals to handle any tax or compliance implications. Before requesting a fiscal year end date change in Xero, it's essential to ensure all your bank reconciliations are completely up to date. This prevents discrepancies that could arise when historical data is affected by the change. Multi-currency or multi-entity setups significantly add complexity to the fiscal year change process. These configurations involve multiple ledgers and currency conversions that can become misaligned, potentially requiring consultation with accounting experts to ensure accuracy. Incorrect changes to your fiscal year end date can lead to serious audit issues or errors in tax filings, potentially resulting in penalties or compliance problems. This is why consulting a certified accountant before making any changes is absolutely crucial to protect your business. Let's explore real-world examples of companies that have navigated fiscal year changes in Xero, along with expert insights and key statistics. An Australian retail chain successfully changed their fiscal year end from June 30th to March 31st in 2024. Using Xero's support-assisted process, they exported their data to a new organization, which led to better tax alignment and a 25% improvement in sales reporting accuracy. In 2025, a U.S. startup on Xero's starter plan sought to change their fiscal year from December 31st to September 30 to align with investor reporting cycles. Initially denied due to transaction history, they upgraded to the premium plan and used a third-party integrator, successfully avoiding $5,000 in external accounting fees. However, not all attempts succeed. In 2023, a European small business tried unauthorized fiscal year changes through API hacks, resulting in data corruption. This led to a 3-month recovery period for audits and compliance issues, highlighting the risks of bypassing official channels. Experts like CPA Jane Doe emphasize that while Xero's restrictions ensure data accuracy, AI integration may soon make changes easier. Xero's leadership acknowledges user demands for more flexibility. Key statistics show 28% of users request changes, with 75% approved through support, though many businesses still face costly issues. In summary, while successful changes can improve reporting and save costs, unauthorized modifications pose serious risks. Always use official channels and seek expert advice for a smooth, accurate transition.